Hi there, folks, and welcome to our next episode that we're going to be doing with Ashley. Ashley's going to tell us a bit about how the markets are doing and the current trades we're in. And Ashley, welcome to our next chat. Good to have you.
Yes, hi, Malcolm. Nice,
Hi.
thank you.
Right, so could you just quickly give us a quick overview on the current trade you're in? I think you're in a sand trade, if that's right. You could just run down that for us.
Yes, that's correct. Okay, so let me just give you a quick rundown here. I entered this trade a couple of weeks ago, so I've actually been sitting in this trade for quite a while, but it has turned out pretty good. As you can see, that little blue grayish line there, that's our entry point there. And at the moment, we're sitting in just over $2,000 worth of profit. Unfortunately, I am on the wrong end of the funding rate as it stands at the moment, but that can actually change. So I'm not too worried about that, but it will probably over the next few days change back into the green. It's not going to affect the overall gains of this trade if things keep going in the direction we want it to go. So, yeah, I'm not too worried, but it would be nice if we were on the right side of the funding rate. Okay, so just looking at the trade quickly, Malcolm, you can see our position on this trade because I did cross-trade this position. We're sitting with a position margin at the moment where our liquidation is at $20,000, which has pushed our liquidation up to 0.37 cents, which is basically 37 cents. And the total value of our trade is $90,000. So it's a fairly big trade. It's a very strong trade. It has actually turned out to be a fairly strong trade. We do have a little bit of support here at the bottom, which you can see on the 2-hour candles. We're on a 2-hour chart here. Let me just make sure. Yeah, we're on a 2-hour chart, and you can see on the 2-hour, we've been testing this support level here at 30 cents. And, eventually this should break. And we'll take a look at the Bitcoin chart in a minute, and then I'll show you how this correlates with the Bitcoin price. But overall, looking really good, looking very strong. As far as short positions go, obviously, the rules for trading, we short into weakness and long into strength. So we are in a short position because Bitcoin it's very weak at the moment. And, anything can happen. We know anything can happen in this space, but the probability is that Bitcoin's going to go down. So we're looking pretty good. We are in a small amount of profit here so far. And if this trade rides out like I hope it will, down to the 10, we are here at 10% at the moment. So 10% is giving us $2,000. So if we can get this down to, or should I rather say up to 100%, that will give us around about a $20,000 gain on this particular trade. Pretty much I can say about this. If you've got any other questions, maybe.
Yeah, sure. Maybe if you were showing me earlier, maybe what we could do is just jump across to Bitcoin.
Sorry, my computer's my connection's a little bit slow because of our load shedding here in South Africa. But you can see everything's
fine, not to worry.
Yeah. Excuse me, everything's kind of moving down as far as the asset classes are concerned. And we can see the Dixie moving up. Okay, now I just want to take us to a full screen here, if I may, and just to show you what the Dixie is looking like here. Sorry, 1 second. Let's just go to the watch list. Let's go here. Right, okay. So we take a look at the US dollar. And I just want to take us to a 4-hour. Let's go to a 1 day. And here we go. We can see here on the daily that our first target resistance sits here. You can see where this solid red bar is. And at the moment, we can see that we almost, well, the price, let me just zoom in here for a second. You can see here we're almost breaking through. We are seeing a little bit of resistance here, but you know what? I don't know. We'll see during the course of the day tomorrow. If the dollar, we're sitting at 104.1 base points at the moment, and we're looking at probably at 105.5 is around about the next level of resistance. So if we break this level here, then obviously we're going to go up to go and test that more significant, longer range. This resistance here is pretty localized. You must remember we are in the daily. So, you know, overall, you can see here, it looks like the dollar is going up. And the reason why we see that happening, obviously the dollar's all correlated to interest rates and inflation. Dollar goes up, Bitcoin comes down. So that's my overall kind of, you know, analysis of what we may see going into the third quarter of this, the fourth quarter of this year. We do know that we normally see some kind of a rally in the markets over December time. But, you know, right at the moment, we in September, the beginning of September. So September, October, we'll probably see. Well, look, let me just say this. September, if you look at the history of September, it's always been red. September and even going into October. So I reckon over the next couple of months, we'll see a little bit of a bleeding off of the price of Bitcoin. And then maybe the end of October, start of November, we could see the markets turn a bit to see maybe a little bit of a relief rally over the Christmas period. That's just my analysis. I mean, there are a lot of other guys out there pretty much saying the same thing. So we'll see. We'll see. But for now, Bitcoin looking really weak, and the probability of seeing Bitcoin go down is very high, in my opinion. Okay.
Yeah, well, that's thanks, Ashley. That's a good summary of what to look out for over the next month or so. And then just quickly, could you just give us a quick sort of indication of some of the calls that have been dropped in the market calls, just to show the guys or what we've been doing and what's happening there? And also, I think you said that this has been one of the toughest trading months in the history of Bitcoin or crypto these last few months. So yeah, I think we've been really well on those calls. If that's the case, we've done extremely well on everything.
On everything in general, we've done pretty well. We've managed to keep our head above water, you know, and some, because as I said, you know, if we go and have a look at the volatility index, which I think I did post in August, the end of, I think the second or third week of August, we can see that, you know, the volatility has been at its lowest in the whole history of cryptocurrency.
Yeah.
So it has been really the last few months, you know, ever since we saw it. Let's just say, if we just go quickly before we finish up, I'll just take us to. So when we take a look at market structure from this last, remember when we started the TradeFi NFTs, it was in June, and we entered the market somewhere around here. I then closed my trade, and we entered again, and we added to our trade. That was that really nice first trade we did when we took 127%. Okay. Then after that, we saw a really painful consolidation for almost 3 months. And it wasn't long ago, the other day, when we actually saw this big drop over here. Let's just take a look and see more or less what the date was there. Okay, so on the 16th of August, we saw a spillover on the price from where we were up there, 29,000, 30,000, and then we saw this spiller from vanilla, you know what I mean, happen. and the price tanked, and we came all the way. All the gains we had made, we lost all those gains. We've come back down again, and now the price is sitting at just below $26,000. Okay, but my point I'm trying to make is this whole period, and even this period now, the markets have been really, really unstable because a lot of this movement and momentum hasn't been caused through normal market conditions. A lot of this nonsense here has all been hype.
Mm.
And you know what I'm
Trade on
talking
that,
about.
yeah.
All the stuff with the SEC and what's been going on with the FTX and all the exchanges and the regulation, all the nonsense there. It's brought a lot of instability and very hard trading conditions. So us as like traders who rely on chart analysis and trading, with a proper trading plan, kind of been like kind of kicked off our perch a little bit because of all this unstable market sentiment that's been involved in the price.
Yeah.
But having said that, as you just rightfully said, going through all of that, we actually have managed to keep our head above water through this time. But, just like all markets, like there's ups and there's downs, Malcolm. So this is why we love derivative trading, because at the end of the day, it doesn't really matter. If a recession hits the world tomorrow, which I actually believe we've been in this recession for a while, a lot of economists are only saying now, but in any case, if that happens and it all turns bad tomorrow, we'll still survive, because we're going to trade the market up or down. That's the beauty of derivative trading. Doesn't really matter for us
Yeah.
at the end of the day.
I just want to mention one thing, actually, as well. A couple of guys asked, they look at the chart and they see it suddenly shoot up or come down, and they say, "Oh, did you get in that long, or did you manage to get that short?" And I just want to point out something to the guys who are asking those questions. Like if you go to that last spike that we had on Bitcoin the last week, those two there. I think what people need to understand is that there's no backing of trading analysis to back that movement up or that movement down. That was purely on Grayscale. That was with the Grayscale winning that court case, I think it was, and there was something to do with Grayscale. Anyway, I can't remember the exact details. But there's no
Grayscale won their court case with the SEC.
That's right. Yeah, they won their court case, and so that went up, and then Bitcoin came straight back down again. Now, there's no ways any trader or somebody can actually predict that, because you don't know that is coming out. So if you're going to try and go on something like that, that's just purely gambling, taking a risk at, you think that's going to come out, so let's try it and see if it goes up or down. There's no analysis to really justify getting into a trade there. So just to answer those guys' questions, we can't trade based on hearsay or is this going to happen or not. We've got to work on the fundamentals that the chart shows. So just to answer those questions for those guys, we're not going to trade that hype. We'll trade on technicalities and analysis that comes through. So I think that's just one of the questions I wanted answering. I don't know if you if you have anything to elaborate on that, or have I summed it up? Well,
you've pretty much summed it up, Malcolm. What I'll do is I'll just take it one step further, and I'll let everybody know right now. As a trader, as a professional trader, never. I don't trade hype, and I don't trade news events, ever. Those traders out there that do that kind of thing, that's entirely up to them. Me, personally, I don't trade hype, and I don't trade news events. And there's plenty of them. Just to, to let you guys know, we have a thing called, I'll just bring it up a second. It's called the Forex Factory. Okay, now for those traders that don't know what this is, the Forex traders will know exactly what I'm talking about here. This thing called Forex Factory, it's basically a website where you can go and it gives you all the news, all the events that happen on a monthly basis, like the CPI report and the FOMC and all these anything that's related to into currencies around the world. We don't look at all the others. I'm only interested in the US dollar, okay, because that's the ones that impact the markets the most. So, you know, Malcolm, we know that every week, every month, like, let's take a look at, let's see here today. Let's have a look at today, and let's have a look at this week. Okay, let's go look at this week. Well, let's have a look at today. Let's just see something here. Australian dollar. Okay, there's nothing here for the US dollar. Just so that the viewers understand, anything that is in red here is what they call high impact. So if we go and have a look at tomorrow. So tomorrow, yes, yeah, tomorrow is the ISM services. Okay, if you go and click on there, it'll basically tell you Institute for Supply Management, latest release, level of a diffusion index based on surveyed purchasing managers, excluding the manufacturing industry. Actual greater than forecast is good for the currency. Okay, now I'm not going into a long story, but these are all the stats that are released on a weekly, monthly basis. And coming back to the point of what Malcolm has just said now, none of these high impact events are tradable. They're high risk. So when you see the markets do things like this, most of the time, sorry, let me just take us back. When you see, okay, this particular one is like Malcolm said, it was related to the grayscale court case that was won over the SEC. But a lot of the others that you see, many of these that we see going back to when that parabolic rise ended here, all this over here, a lot of this stuff is all to do with the Federal Reserve, the SEC, FOMC, the PPI, call reports, everything. You'll see whenever they release these statistics, you'll see the market jump up and down and spike. You can go and test it yourself. Just go and download, go and put in Forex Factory and go and have a look at the red folders, high impact events. And you can actually have a look at the time and then go and sit at the chart there. Like if it says at 2:30, the Federal Reserve or the Fed chair will release unemployment statistics, and then go and watch the chart and see how volatile the price action becomes. So now anyone with a bit of common sense will understand that it's very difficult to trade these events because the market becomes over volatile. So it's all fair and well if they said, well, you know, the Fed's policy is going to be hawkish as far as inflation is concerned, and that's good for currency. So we can say, we can surmise and go, oh, well, that's good for the dollar. So if the dollar goes up, it means that Bitcoin's going to come down. So that's great for placing a short, right? So in theory, that's brilliant, but it doesn't work like that because at the time, the price won't only go up, there's delayed effects. It will go up and it will go down. So what are you going to do now? You're not short. If you place a long, you're going to get stopped out. If you place a short, you're going to get stopped out. So my advice to any traders that know anything about this, don't get out of the market. Close your trades. Unless you're a very experienced professional trader, know how to trade these volatile markets, don't even attempt it because you're probably going to lose money. And that's just my advice. So long story short here, from what Malcolm, what you've said, we will never trade hype and we will never trade news events. Bottom line.
Excellent. Well, thanks for that, Ashley. And I think that's a good note to finish up on. And also just to say, guys, you know, having gone through mostly one of the most difficult trading few months that we've been through, and we're showing good profits, it looks really good for when the markets do change, and they do change. I mean, things go in cycles, and things will turn around. And yeah, we'll be looking good. Okay, Ashley, thanks so much for that. And we'll catch up again soon, and hope everybody enjoyed this video.
Yes, wonderful. That's brilliant. And also, Just before you go, Malcolm, unfortunately, at the moment, because of what we've spoken about, you know, when it does come to the market calls, I haven't dropped a lot of signals this month yet. And that's basically due. If we just take a quick look before you close off here, and we just go to our market calls, you can see here, I haven't dropped a lot. We actually, if I start here, just to show the guys, we started here, September, the first call. So we've dropped this ADA, which that's active at the moment. Rune is active, and we're doing okay on all of these. Sand we got stopped out of, but that was just due to, I don't know, miscalculation in the stop loss, but I'm going to do a re-entry on sand. Even although we took a little bit of a knock on sand, we still have another opportunity to trade it and make back any loss that we have on sand. So during the course of today, I will release the new entry point for sand. But we don't have a lot of coins so far. I think there's 4 at the moment. It's, as I said, it's ADA, Rune, Sand, and Bitcoin. These are the 4 market calls that we have so far. But as I said, Malcolm, just to remember that it's not an easy time to be trading now. There's not that many opportunities. Everybody's waiting to see what Bitcoin is going to do now. I mean, this is the big thing. We know that Bitcoin at the moment, there's a massive, we are sitting at this area of support here, round about here. And that should be green. We'll change that to green. And we are right at the verge. It's been testing. And as I said, the probabilities are very high that Bitcoin is going to, you know, I can't say whether it's today, tomorrow, even this week, but I'm quite sure that this day the bulls are going to lose this level of support, and we're going to see the price come down probably over the next few weeks, even possibly come down and retest the 20 area level, $20,000 area. Big possibility of that happening. And yeah, that's pretty much for me what I can say. Let's see what happens.
Excellent. Okay, thanks, Ashley. And yeah, look forward
wonderful. Enjoy the rest of your day, and we'll talk to you guys later.
Thanks so much. Chat soon. Cheers. Bye.
All right. Take care.